Don't forget about the core logic, because even in markets like we're seeing right now, the core logic still remains consistent and it's been providing consistent gains throughout this whole process for the most part. The only time that core really doesn't pan out is during those FOMC weeks, but other than that, you still get the 85% win rate just by following the logic in and of itself. So if you're not familiarized with the logic yet, you go ahead and just look through the Discord, ask questions if you have it. Make sure that you understand how to get the screener pulled up and run it on a daily basis and what to look for and all that good stuff. It's very straightforward and simple, but these plays are continuing to pay out even during this current situation. So as far as the longer term outlook, still nothing has changed there. This is just temporary short-term deleveraging, still making more room for that upside. We saw what $150 billion in repo did to the markets last week, and clearly they weren't ready for it, and we had to get past these CPI numbers. So inflation is the repo. The repo hasn't came down, so until that changes and until the outlook changes, long term, nothing has changed. Short term, the best thing you can do is protect your longer term positions by going slow, protecting them by playing the core logic puts and calls that come in on the screeners, and that's really all we can do. But it's better than just sitting there averaging down way too fast and then not having any capital to work with. But core logic, don't forget about it. As far as plays for today, REL might have another day left in the tank. It all depends. Considering the pre-market conditions, I wouldn't expect too much out of it. Again, the move and the play, it showed up on the screener 2 days ago. Right here at this point when it hit the high. And then since then, it's been a beautiful play. Last 2 days have been great. And today may be the ideal exit. We'll have to see. You still got your RSI over 70, so just pay attention to that. If it drops down below, just make sure you try to catch it at the bottom of the momentum. Other than that, I mean, just hang in there. It's just another day. But as far as the SPY 500s for December, market opens in about 5 minutes, so we're not going to be able to see, I don't think right now, the pricing. It will be telling because my average right now is for December is 0.05, and it's been that way. It's weathered the storm throughout this week. So if we open up and it's still in profit, I mean, that should be all you need to know. Nothing's changed. There's still time on the clock. The media narratives are still churning out left and right, and again, nothing's changed. So just make sure that you're protecting yourself while waiting by playing these core opportunities and playing protective puts against your longs when necessary. But that's all I have for you. We're right here at the gap layer. I mean, let's go ahead and draw this out. So right here, support 1, and right here, support 2. Gap corridor. We're right there. So keep that in mind. And once we make it past here, then we got 329 at the next point, then 276, then 221 as the very, very lowest point before the COVID run-up. When will we see this? If we see it, I'm not sure. There's no way to tell, but it's probably sometime next year. We got to get this inflation and repo down first, and the consequences of that are going to be upward pressure on the markets. But until then, core logic. Y'all have a good one. I will see you in the Discord.